Hello, and thank you for joining today's webinar about other income and tax reliefs on your online tax return. Before we start today's webinar, I'll just mention that this webinar is part of a series that will help you with your self-assessment tax return. These are the titles of the other webinars in the series. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. In today's webinar, we'll look at other income to tell us about, including bank interest, dividends, UK pensions and state benefits, including work pensions, the winter fuel payment or pension age winter heating payment, the high income child benefits charge, and any other types of income. We'll also be looking at claiming tax reliefs on your tax return, including payments into pensions, gift aid payments, blind person's allowance, and marriage allowance. I'll just mention making tax digital or MTD for income tax. From 6th of April 2026, there's a legal requirement to use MTD for income tax for anyone that had self-employment and or property income above £50,000 in the tax year 2024 to 2025. You should already have signed up for MTD for income tax and be using compatible software to record your income and expenses for the current tax year 2026 to 2027. However, the principles of working out your income and expenses remain the same. If you signed up to use MTD for income tax early and started to use it in 2025 to 2026, you'll send your self-assessment tax return for that year, including any other income sources using your compatible software. If you're starting to use MTD for income tax from the 6th of April 2026, you need to complete your self-assessment tax return for 2025 to 2026 as normal by 31st of January 2027. The £50,000 threshold is being reduced over the next 2 years to £30,000 and then £20,000. You must sign up to MTD for income tax before the start of the tax year in which you're required to start using it. Find out more about MTD for income tax on gov.uk, in our webinars and our videos on YouTube. After telling us about your main types of income on your tax return, we'll ask about other income you told us about in the Tailor Your Return section. Please remember, you need to include all income you received in the tax year, even if you've already paid tax on it. Let's start with UK interest. The amounts you need to tell us about will be on the statement given to you by the interest payer. Although many people can earn some interest from savings without paying tax, you should still include any taxable amounts received, even if no tax is due. If any tax is due, the system will work this out for you. However, don't tell us about interest from tax-free accounts, such as individual savings accounts, also known as ISAs, and some national savings and investment accounts. For joint accounts, only tell us about your share. That's normally half, but it doesn't have to be. This is the UK interest page of your online tax return. You need to enter the total amount of taxed and untaxed UK interest separately. If you have more than one account, there are worksheets to help you work out the total amount for either taxed or untaxed interest. These are for your use only and are not sent to HMRC when you submit your return. When entering figures in the worksheet or adding the figure together yourself, you should include pence. The system will automatically round down the total amount, which is to your benefit. Since 6th of April 2016, banks and building societies have been paying interest gross, so without deducting tax. Please check to make sure tax has been deducted before entering a figure here. If the interest has been taxed, tell us the net amount. That's the amount you received after tax was taken off. The system will work out the amount of tax you've already paid and include it in your calculation. You should also include any net income from a purchased life annuity or any taxable cash or shares received from the takeover or merger of a building society in this box. The Help About links give further guidance. In the untaxed UK interest box, it's the total gross amount received that should be entered. If your only foreign income was untaxed foreign interest of up to £2,000, enter the amount in this last box in UK pounds. This is instead of filling in the foreign section of the return. You need to tell us the name of the country the interest came from in the any other information box later in your tax return. If you receive dividends, we ask you to fill in this page. You might get dividends if you're a company director or you own shares in a company. You can find the amounts to tell us about on your dividend vouchers or counterfoils from the company that paid it. The first £500 of dividend income is tax-free in the tax year 2025 to 2026. However, show the amount of all dividend payments received. The system will work out the amount to be taxed, if any. Enter the total amount of dividends you received from UK companies in this box. You should also include dividends from employee share schemes. There's a worksheet to help you if you've more than one dividend. As with UK interest, include pence when adding the amounts together and the system will round down the total amount to your benefit. There are some amounts you shouldn't include in this box, and you can find out more in the Help About guidance. The Other Dividends box is for dividend distributions from authorised unit trusts, open-ended investment companies and investment trusts. Include dividends from accumulation units or shares that are automatically reinvested. Don't include any equalisation amount. The Foreign Dividends up to £500 box allows you to tell us about taxed foreign dividends if it's your only foreign income. This is instead of filling in the foreign income section of the tax return. Tell us the sterling equivalent of the dividend and make sure you tell us the tax taken off in the next box. There's more information in the Help About guidance. On page 1 of UK pensions and other state benefits, show the total amount of state pension you were entitled to in the year. This may be different from the amount you receive, as the state pension is paid weekly, 4-weekly or quarterly in arrears. Show the amount for the full year, not the weekly or 4-weekly amount. A figure may already be showing, but you need to check it's correct. There's lots of guidance in the Help About link about working out the correct amount. Because they are not taxable, do not include any addition for a dependent child, annual Christmas bonus or winter fuel payments. On page 2 of UK pensions and other state benefits, this first question is where you show any state pension lump sum payment you've received in the year. Show the gross amount. That's the amount before tax. Please make sure you tell us the amount of tax you've already paid in the next box. Don't include any regular state pension payments you've told us about on page 1. Further down the page, in the Pensions Other Than State Pension box, enter any work or private pensions, retirement annuities and taxable lump sums treated as a pension that you've received in the year. You need to tell us the gross amount here. That's the amount before tax. The amounts to enter are on the P60 from your pension provider. The Help About link tells you what to include. If you had more than one pension, shout the total amount before tax from all pensions and annuities received in the year. There's a worksheet to help with these. This worksheet will be sent to HMRC when you submit your tax return. When using the worksheet, enter the amount from each pension, including pence. The system will round down the total income to the nearest pound. This is to your benefit. It's important to tell us in the tax taken off pensions other than state pension box the total amount of tax that was deducted from all your pensions, retirement annuities and taxable lump sums treated as pensions. If you don't, your tax bill will be more than it should be. In the additional information box later in your tax return, you'll need to tell us the details of who paid the pension, their PAYE reference, the amounts before tax, and the tax taken off each pension you received. The remaining questions on this page are for taxable state benefits. Not all state benefits are taxable. You'll find guidance using the Help About link for each type. Gov.uk has a list of the most common state benefits that you pay income tax on. It also lists the ones you do not have to pay income tax on. You'll find the amounts to show on a P60U or P60IB. If you stopped receiving a benefit during the year, the amounts will be on a P45U or P45IB. Tax isn't normally deducted from state benefits when they're paid to you. However, tax is deducted from incapacity benefit after the first 28 weeks. So remember to show the amount of tax deducted where this applies. If you received a winter fuel payment or pension age winter heating payment in the tax year ending 5th of April 2026 that you need to repay, we'll ask you to tell us the amount here. If you're not sure of the amount, please check your bank statement. In England, Wales and Northern Ireland, most payments were made in November or December with a reference that includes your national insurance number and WFP. In Scotland, most payments were made between December and February with a reference of PAWHP. The next page to fill in is for the High Income Child Benefits charge. You're given this page if you told us in the Tally Your Return section that you received child benefit, your adjusted net income was above £60,000 and you're the highest earner. This is included here, as the High Income Child Benefits charge is based on your total income and the amount of child benefit that you received in the year. You need to tell us the number of children that you received child benefit payments for in the tax year. Then tell us if you received payments for the whole of the tax year for every child. If it's yes, a calculate button will appear. This works out the amount of child benefit you received in the year. You'll then need to confirm it's correct. If you answer no to say that you didn't receive child benefit for the full tax year for every child, we'll ask for further information. This allows the system to work out the amount of child benefit you received when you use the calculate button. We also ask you to tell us if you stopped getting all child benefits payments during the tax year on this page. If your child benefit payments are ongoing, leave this box blank. On the Other UK Income page, we ask you to select the type of other income you had in the tax year. Please don't use this section to tell us about income that should be shown elsewhere in your online tax return. If you select any of the types of income on this page and then save and continue, you're given a page for each of the selected sections to tell us the details. I'll just briefly mention the sections most often used are employment lump sums, compensation and deductions and certain post-employment income, and any other income. Select this one if you have received an employment lump sum payment, which would include redundancy payment. The Help About guidance gives more information on what incomes you may need to tell us about in this section. This one is for any other income you may need to show on your tax return. There are many types of income you may need to include here, but as I've mentioned, don't use this for income that should be shown elsewhere on the tax return. There are lots of examples of income that you may need to include in this section in the Help About guidance. Once you've told us about all your income, we ask about tax reliefs you want to claim. We'll now look at the more common tax reliefs you may be claiming. If you paid into a personal pension, retirement annuity, or overseas pension scheme, include all payments made on this page. You should do this even if you're not due further tax relief, as it can affect other things in your tax calculation. However, don't include any payments into an employer's pension scheme that were taken from your wage before tax was taken off. You've already had full tax relief on these payments. If you're not sure, check with your employer. You'll find the details to enter on your pension certificate or receipt from the administrator. In the first box, enter the gross amount you've paid into a registered pension scheme, also known as PPR, where basic rate tax relief is claimed by the pension provider on your behalf. When you make a payment to a registered pension scheme, they claim the basic rate tax, that's 20%, on your behalf. They add this into your pension fund along with the payment you've made. This is known as relief at source. So, you have made a net payment, but you need to tell us the gross payment. You may get a pension certificate or statement from the pension company showing the net and gross amount, but if you don't, you can work it out. Divide the net amount you paid to the pension company by 80 and then multiply by 100. If the amount entered in the first box included any one-off payment, tell us the amount here. This helps us get your PAYE tax code correct if you have one. If you make payments to a retirement annuity contract, also known as RAR, and the provider has not claimed basic rate tax relief, enter the amount you paid here. Do not include any PPR payments in this box. Where you have made payments to an employer's registered pension scheme after tax was deducted from your wages, so you've not had relief at source, enter the total amount paid in the year in this box. The Help About link gives examples of when this may happen. If you make payments to an overseas pension scheme which is not UK registered, and the payments were made after your pay was taxed, you may be entitled to tax relief. Please see the Help About guidance for more information on this. You can find out more about tax and tax relief on private pension contributions on gov.uk. The questions on this next page are about charitable payments and qualifying gifts. Don't include amounts paid under payroll giving on this page. No further tax relief is due on these. Include all amounts you pay to charity under gift aid and any qualifying gifts, even if you're not due further tax relief. They can affect other things in your income tax calculation. If you pay tax at the higher rate, you may be due further tax relief. There's a worksheet to help if you make more than one payment, up to a maximum of 10. This is for your own use and isn't sent to HMRC. As with other worksheets, include pence. As this is a relief, the total amount will be rounded up to the nearest pound, which is to your benefit. In this first box, show the total of all gift aid payments made in the tax year, but don't include the tax relief the charity claims. Just show the amount you actually gave. HMRC will use these figures to update your tax code for the current tax year, if you have one. So, it's important to tell us in this box the amount of any one-off payment you've included in the first box. If you don't tell us about the one-off payment, we'll update your tax code with the wrong amount, which could mean you'll not pay enough tax in this current tax year. On your last tax return, if you asked us to treat payments made in the tax year 2025 to 2026 as if they were paid in the tax year 2024 to 2025, enter the amounts here in the gift aid payments made in the year to 5th of April 2026, but treated as if made in the year to 5th of April 2025 box. As long as you send your tax return by the deadline in the gift aid payment made after 5th of April 2026 box, you can ask us to treat payments made after 6th of April 2026 up to the date you send this tax return, as if they were paid before the 5th of April 2026. You may want to consider this if you know you won't be paying higher rate tax in the current tax year 2026 to 2027, but you did or will do in the last tax year 2025 to 2026. These last two boxes are used to claim tax relief for gifts of qualifying shares, securities, land or buildings to charities. Please use the Help About link for more guidance on what to include and what qualifies. You can find out more about tax relief on charity donations on gov.uk. If you're registered blind or severely sight impaired and your name is on a local authority or other register, you can claim blind person's allowance here. If HMRC are aware of your entitlement, the details may be showing. If not, enter the name of the local authority you're registered with. If you live in Scotland or Northern Ireland, enter Scotland or Northern Ireland. If you've asked your eye specialist to tell us you're sight impaired, enter specialist. If you can't use all the allowance, there's a section at the bottom of the page for you to give the surplus amount to your spouse or civil partner. You can also claim their surplus amount here. Before we look at the next page of the tax return, we'll briefly explain what marriage allowance is. The marriage allowance allows eligible people to transfer £1,260 of their personal allowance to their spouse or civil partner. This could cut their tax bill by up to £252 in the tax year. However, you may pay more tax yourself, but you could still pay less as a couple. To be eligible to transfer the marriage allowance to your spouse or civil partner, all the following must apply. You must be married or in a civil partnership. You, the person giving the allowance, do not pay income tax or your income is below the personal allowance, usually £12,570, and your spouse or civil partner only pays income tax at the basic rate. If you pay tax in Scotland, they must pay tax at the starter, basic or intermediate rate. Let's look at claiming marriage allowance on the tax return. This is the marriage allowance page you need to fill in to transfer the marriage allowance to your spouse or civil partner. If you are receiving the allowance, you don't enter anything on the tax return. If the transfer is already in place, the additional allowance will be included in your tax calculation. If it's not yet in place, your tax calculation will be amended once it is processed. The details you need to tell us about your spouse or civil partner are their first and last names, their national insurance number, their date of birth, and the date of marriage or civil partnership. You can find out more about marriage allowance on gov.uk. I'll just remind you that these are the titles of our other webinars in this series to help you fill in your online tax return. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars full self-assessment page on gov.uk. We're nearly at the end of the webinar now. Here's a summary of what we've covered today. In today's webinar, we've looked at other income to tell us about, including bank interest, dividend, UK pensions and state benefit, including work pensions, the winter fuel payment or pension age winter heating payment, the high income child benefits charge, and any other types of income. We also looked at claiming tax reliefs on your tax return, including payments into pensions, gift aid payment, blind person's allowance, and marriage allowance. If you need more help, our full range of help and guidance can be viewed at any time. Thank you for listening, and goodbye.